Alrighty, and we have selected the McDonald's Corporation for our group project. I'm Riley, and then this is Henry. And all right, so for company information on McDonald's, McDonald's Corporation is a publicly traded company on the New York Stock Exchange. Its ticker symbol is MCD. McDonald's embraces and prioritizes its role and commitment to the community, in which it operates through its purpose to feed and foster community and a mission statement of creating delicious feel-good moments for everyone it serves. McDonald's as a company, it franchises and operates McDonald's restaurant in the global restaurant industry. Something we found fascinating was not only do they have corporate run stores, but they franchise through several different means. So conventional franchise arrangements, developmental licenses, and affiliate franchises. And then McDonald's Corporation, its market cap compared to the S&P 500 is 0.7% roughly. And then just for the picture on the bottom, those are the number of stores that are franchise ran, either through conventional, developmental, or foreign affiliates. And so then it also shows that 38,000 roughly are franchised and roughly 2,000 are company and corporate operated. So now we're going to get into the company financial summary. So just to get started, outstanding shares are about 731.5 million outstanding shares with a market cap value that sits around $181.6 billion. Assets reported on the balance sheet in 2022 was roughly $50.5 billion, and they're predominantly made up of PP&E. As their restaurant franchise, they have physical locations. And then the sum of their current and long-term liabilities is around the range of $56.5 billion. Something we found interesting, we discovered while reading disclosures, is that in the year 2022 on their 10K, they reported a fair value adjustment of their long-term liabilities of $2 billion. So they reduced their long-term liabilities by $2 billion. And then for owner's equity, it's actually in a deficit right now. Through reading disclosures, we found out it's tied to several factors. Their corporates repurchase of franchises from the franchisee, and then they were authorized in previous years to repurchase company stock and treasury stock on an ongoing basis. And if you go and look at the picture above, it shows that 15.8 million shares were repurchased at a price of $3.9 billion, which increased the amount of common stock and treasury shares that they've repurchased in the previous years. And then another thing about their financial statements is that they identify three segments to their business. So they have the US market, the internationally operated markets, and the international developmental licenses and markets. McDonald's does not recognize each individual company in international markets as each company does not fit the criteria. They are below the 10% reporting threshold to be their own criteria. And then the picture below just shows a pie chart of the from 2020 to 2022 of their operating segments and the percentage that is of their business. So then significant accounting treatment details. During the fiscal year, two accounting standard changes did happen to leases and reference rate reform. In the disclosures, McDonald's reported that these had no material change to the corporation's financial statements. And then McDonald's engages in a large amount of hedge accounting on foreign currency. Something we found fascinating within that is that some hedging and derivative activities do not fall under hedge accounting treatment, are immediately recognized as gains and losses. The snip of the disclosure below basically reads that the company has equity derivatives, specifically total return swaps, that as they're recognized, they're just expensed as SG&A. And then moving on, we're going to equity method is used for all subsidiaries, even the Chinese and Japanese affiliates that they recognize they have less than 50% controlling interest over. And then McDonald's does report goodwill predominantly coming from net purchase of at U.S. market and internationally recognized markets franchises. And then McDonald's offsets their goodwill from their currency translation laws when purchasing the international restaurants. Right, and then
All right, so next we're going to be talking about the other interesting disclosures we found. There are three of them, and the first one is going to be a France audit. There was a $537 million non-operating expense related to the settlement of a tax audit in France. This was due to a transfer pricing method that was inaccurately reporting the income taxes, and they primarily used Switzerland and Luxembourg as the countries to purchase other goods from. And it states in their disclosure that in 2022, the company settled an income tax audit with France, which resulted in $537 million of non-deductible, non-operating expense and conclusion of income tax matters related to transfer pricing in the years 2009 and 2020. So this has been happening for 11 years, which justifies the $537 million. Next is the McDonald's Russia. Due to the war on Ukraine that happened early in 2022, McDonald's has temporarily closed their stores in Ukraine and permanently closed and sold their restaurants in Russia. Russia does not show up in their financial statement due to a disclosure that states they were permanently treated closed as of April 1st, 2022, and are therefore excluded from the calculation of comparable sales and comparable guest counts beginning in the second quarter. This is because the war is a very unusual event that happens and doesn't accurately represent the normal business activities of McDonald's. And then next. And the last interesting disclosure is the purchasing of their own franchises. In 2022, the company bought back multiple of their own franchises. The disclosure states this led to an increase of $75 million in tangible assets, $525 million in intangible assets relating to mostly reacquired franchise rights, and $190 million increase in goodwill. It also states that if the franchises are sold within 24 months of acquisition, the goodwill is written off. It also states that the company lost goodwill due to the foreign currency translation of $70.9 million in international operated markets. None of the goodwill was written off because none of them were sold within 24 months of acquisition. And last is the stock prices after the earning report. So late October was their third quarter earnings release, and the stock per share was $260. Earnings were very good, and at the end of the fourth quarter, or at the end of the third quarter, the stock price had risen from $260 to $285. All right, thank you very much. Eric, Big E.
Big Sizzle.